Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. This is Shane Chu. I'm the moderator for this Bursa webinar. And today we are going to talk about how to analyze the right stocks in the right sector. So today we are going to delve deeper into sector analysis. How can we find the best performing stock in the best performing sector? So this is our agenda today. And since 2 days ago, it was the International Women's Day. So today we got the female speaker, okay, who is Pauline Yong, to come on our show to share with us how she analyzes the right stocks in the right sector. Okay, now let's wait a bit more for more people to come into the room. And for our friends here who are tuning in from YouTube, also good evening to all of you here. And are you all ready for this webinar? If you're ready, please type, ready, okay, in the chat box. Let me know. Yes, hi everybody. Okay, ready. Today, this session also received overwhelming response. All right, cool. Now, before we begin, just want to do the disclaimer. Whatever we share on this webinar is only for educational purpose. In no way that we give any recommendation to buy or sell to any companies that we mentioned during the case studies. So if you decide to buy or sell any companies after this webinar, you do it at your own risk. All right. So allow me to briefly, introduce our speaker today. Pauline is a licensed and experienced financial planner who is certified by the Malaysian Securities Commission Financial Planner Representative License (CMSRL) and Bank Negara Financial Advisor Representative License. Pauline is also a course trainer and public speaker at Financial Planning Association Malaysia and Bursa Malaysia. Over 25 years in education, she has accumulated over 50,000 students. Wow! And conducted over 200 large-scale corporate courses. So other than being a professional financial planner and educator, Pauline is also a best-selling author who has published 6 books on investment and financial planning. And if you go to a bookstore like MPH, you'll be able to find her books there. Okay, because I always like to go to the bookstore and always see her books there. Okay, so her articles have appeared in financial magazines such as the Personal Money Compass, and many more. So, Pauline, are you ready to rock the house?
Okay. Okay. Thank you. Thank you, Shane. So, good evening, everyone. Very happy that I will be sharing my investment knowledge with everybody here. And today is in a Zoom session. So I think this Zoom session is very user-friendly. I mean, we can communicate better with the audience. And a lot of stuff, because I'm thinking at today's session, right, is on sector analysis. So rather than giving you all the theories, I will promise you to get the best out of today's session. That means I will show you hands-on resources, like where are the resources that I get my information from, so that you guys can have the same access as well, because all these are all public open source information. Okay, so let me share my screen first. So, okay, can see my screen, right? All right.
Perfect.
So how to analyze, how to analyze the right stocks in the right sector. Now, a lot of time we are looking at what stock to buy. Now, do you know that actually before we even thought about which stock to buy, you need to actually look at the whole investment in terms of the environment, okay, the whole investing environment. And then only you look at it's a top-down approach, okay? From the environment, then you look at the sectors, which sectors would do well because of this environment, which sectors will do well. And then from there, you will try to choose and select the right stock, okay, in that particular industries that are supposed to do well, that you think are supposed to do well. Okay, so let me disclaimer and then okay, wait. Okay, so in today's session, I will explain the different sectors in Bursa Malaysia and their relationship with the economy to demonstrate the using of technical analysis to identify the outperforming sectors. And if for those of you who follow me, then you will know that I usually use both, which is technical analysis and fundamental analysis in choosing the right stocks. So I will also apply this TA onto index as well. So identify the industries that are outperforming the overall market using the fundamental. Okay, then identify and buy the best performing stocks within the outperforming sectors. Now, so before I go into the next slide, let me ask you guys, because this is a Zoom session, right? In this current environment, okay, last year we had the COVID environment, right? So this year, what is the theme for this year? So anybody? Recovery, okay, technology, okay, oil and gas, okay. So I'm looking at the environment first. I'm not looking at the sectors first. If you're looking at the investment environment for last year was a COVID year, was a pandemic year, okay? But this year, the fear environment is supposed to be last year. This year, okay, somebody say post-COVID. Okay, this year, I would look at this year as the vaccination year. Okay, vaccination year whereby we are going into a transition from COVID to the next year will be post-COVID. Okay, next year, if you were to ask me, I think most likely next year will be post-COVID. So this year will be a transition year. So in this year, what we are expecting is that most likely, hopefully, if the vaccination is working well, okay, hopefully we are seeing a recovery. Yes. Yeah, Lim Hin, yes, correct. A vaccination leading for recovery. So another thing about QE, somebody say about QE. Now for QE, right, although last year we had the COVID and pandemic, but at the same time, we also have the QE, which is the stimulus package as well. So because when you're having a very bad situation, pandemic, but at the same time, the government is pumping in with the stimulus package, so that drive up the liquidity and drive up the stock market performance. So this year, if you are looking at the vaccination year and then next year post-COVID, right? So will you be looking at more stimulus, liquidity, or less? Okay, so that's number one question. And then number two, hopefully the economy will be recovering, and then throughout the recovery process, hopefully we do not see any more black swan event. Okay. Yeah, somebody say less stimulus package. So therefore, most likely we'll see that this year, okay, may not be as good as last year, because last year was a lot of a sharp drop and then a V-shaped recovery. I'm talking about the US stock market lah. So a V-shaped recovery, and then also a lot of stimulus package coming into the system. And globally, including Malaysia, we also have unprecedented kind of a stimulus package injected into our economy as well, and that helped to cushion the downfall. So we didn't go below 1,200 points, but we reversed from that 1,200 points. So then, because of this environment, investors always learn from experience. So in the past, whenever in the 2008, we saw from the 2008, we saw from 2020, whenever there's a severe market downtrend or recession, then you see that the government around the world, they will pump in with stimulus packages. Okay, and then you can see immediately the stock market reverses and then become a V-shaped recovery. So investors always learn from experience. So then you will have to think, okay, what happened if there is a next black swan event, and if there's a next stock market meltdown, what happened? So most likely the government intervention, all these are regulators intervention. When the government intervention, most likely it will reverse the drop of the share market. Okay, so we learn from that. So most likely we'll expect this kind of event to happen. So that means what? That means no matter what, you have to stay invested in the stock market. Okay, even though if there's a sharp fall, but this sharp fall, right, it will be followed by a V-shaped recovery because of the government intervention, and then you can see that you know, all these are short-lived. So the thing is that with all this liquidity, all the money printing, and all the quantitative QE in China and also in US, we are looking at a lot of liquidity that will drive up the asset prices. And if you put your money in the FD, you will lose behind a big, huge gap. You will lose a huge, big gap behind. So you will have to stay invested in the assets form, either in equity or properties. You have to stay invested. Okay, so steps in the sector analysis: identify the macro trend in investing. Okay, identify the macro trend in investing of the environment. Okay, we look at the environment, and then next we use technical analysis to identify the sectors. So now I'm going to bring you to this website whereby you can look at the sectors. Can see or not? Maybe I will share again.
We are seeing your slide lah. Oh yeah, we are seeing a PDF. Sorry, we are seeing
okay.
the
Okay, I
Bursa
start
Marketplace.
from Malaysia stock base. Okay, so the one way to look at the indexes and also the indices and also the sectors, because a lot of people ask me where to find the stocks under the one particular sectors. Okay, so I find that this Malaysia stock base, and okay, I type that Malaysia stock base. Okay, it's a good source of information, and it's free, so you can look for the information. Okay, so from the Malaysia stock base, right?
Pauline, when you
The first step you're going to
send messages, right? You got to send to panelists and all attendees.
Oh, sorry.
So if not, only I can see it.
To the panelists and all attendees.
Yeah.
I see. Okay. Okay, Malaysia stock base. Then you go to market. Okay, you click market, and then you come to this place. You see that alphabetical order. That means you can find the Busa stock in terms of alphabetical order. And then you can also see that the Busa indices. Okay, Busa indices. And then when you scroll down, you can see this one is a Busa Malaysia chart and things like that. And then this one is a sector. Okay, this one is a sector. So before I go into the sectors, right, let me show you the indices as first. Okay, I show you the indices. So I click Busa indices. Okay, so I click Busa indices. It's still loading. And click again. Okay, here. Okay, so over here, you see that we have 13 sectors in Busa Malaysia. Okay, 13 sectors. So you can see it's consumer and product, industrial product and services, construction, technology, financial, all these. Now, all these are the index. Index, what is index? Index meaning that this index will track all the under Busa Malaysia listed companies in that category. For example, all the consumer stocks will be under this Busa index. You can find the performance of all these consumer stocks with this Busa index. And then if let's say you want to look at overall what is the technology performing in Malaysia, then you can click this technology index. Okay, so this index will include all the technology stocks. Later we will see what are the stocks, but now I want you to see the big picture, the trend first. Okay, so this is an identify the trend. Okay, so let's say the technology, you click here. The loading the chart now. Okay, it's still loading. Okay, so this is the chart for the Bursa Malaysia, all the technology stocks, and which is represented by this technology index. So you can see that the chart is on a rising trend. Let's see, this one is how many months? This one you can see that it's from last year August, so it's about 1 year trend. Okay, so this one is about 1 year. You can click here 10-year. Now this Malaysian stock base is starting from 2012, so you have about 8 years of data. So you can see that you have 5 years and all this. So this one is about 1 year trend. So for the past 1 year, you see that the technology trend is running up until recently you had a correction because of the bond yield, the 10-year treasury spike in the US that trigger the fear in the investors because they are looking at the market, the economy is recovering. Okay, and then the bond yield is because of the demand for the bond is depressed. The reason why the demand for the bond is depressed is because the stock market, people are looking at the economy recovery. So by right, if the economy is recovery, the stock market is supposed to do well. So therefore, this triggered the bond yield to spike, okay, to spike. And they're saying that above 1.5% because they are comparing the US dividend yield. The US dividend is about 1.5. So if let's say the bond yield is above 1.5, then people will have to switch to the bond. Okay, so that's the comparison. So now it's about 1.5, 1.6. But anyway, if you look at the big picture, right, this shouldn't be a fundamental reason for like a prolonged kind of a recession. It will not lead to another recession. In fact, this problem is a good problem in the sense that it's a good problem is because we are looking at the economy opening up, and then that will cause inflation. And then when the inflation is driven by good economy, then the Fed, which is the central bank of the United States, they will raise the interest rate. And then when they raise the interest rate, then only the stock market will reflect. So now we are still early in the early stage. Okay, so therefore, I wouldn't see this one as a big threat. It's just a normal correction. Okay, so you see that this is a good opportunity for people to accumulate the technology stocks here. But then you have to be careful, because some of the technology stocks, you have to see whether they have broken their support and resistance. So over here, you can see that there's a small double top here. So in fact, if you draw a line, and then you can see that now you are hitting the first target, and then you are rebounding from the first target. So hopefully, without much bad news, you should be recovering, hopefully. Okay, if the market is behaving in a normal situation, it should be recovering. But anyway, from here, the index, you can see the overall trend using technical analysis. Then if let's say you want to look at today, it looks like a construction sector is construction sector. Okay, let's see. So we look for construction is here. Overall, the index by 2.7%. Just now I saw the list there. Overall index increased by over 2%. And then you look at the behavior of this past 3 days. Okay, so it was a 3 white soldier. Now, the thing is, here also got 3 white soldier. Okay, here also got 3 white soldier. This is a candlestick chart pattern. Three white soldier means bullish. But the thing is that here we are coming from the lower band, the bottom band here. Okay, then you have the 3 white soldier, and then you continue. But over here, you are having the 3 white soldier at the upper band. Okay, so that means it's a clear form of a over bullish over here. Okay, that's because maybe there must be some good news coming out in the construction sector. So we do not know yet. Okay, so hopefully there's some good news. So all this, there must be a reason for it. So Anyway, so you can see everything from here, the index. Okay, then okay, then we go back there, and then I show you where we can get those stocks from the sectors. Okay, just now I show you that we are from here. Okay, the filter by sector. Now this I always I use this very often. Okay, I use this very often. So you click here, you can see that there are these sectors. Okay, there are these sectors. So maybe I just want to talk about like today is a construction sector, let's say. Under the construction sector, right, then you have construction, because construction is like plantation. It's like you don't have much subcategory. Some of the sectors you have a lot of subcategories, because like for example consumer, then you have industry, but for construction it's pretty straightforward. Plantation also. So we just look at construction. Then we scroll down, and then these are all the construction stocks. You see, these are all the construction stocks, including some warrants and call warrants and everything here. So you need to identify the stocks. The stocks is without the W and the C and all those things. Okay, so you can see there's a whole list here. So this is all the construction stocks in the construction sector for Bursa Malaysia. Okay, so you can see that today's price change. So how I look at it is that I look at the percentage change. I see which stock has a high percentage change, and then I look at the stock there and see what's the reason. If it's a warrant, I don't bother, because I don't invest in warrant. So I just scroll down and then see which one. Okay, this one got 16%, another warrant. This one 2%. Okay, anything above 3% is quite significant, or anything above 2% is also quite significant. So this is EcoVest is 2%, and then this 6.7% is okay. This one, all this call warrant, all those huge gain. Okay, so you can see a lot. Okay, so that's how you can, and then you can see the volume as well. Okay, then let me go back to the slides. Okay, so you are using the technical analysis to identify the sector. So if you know more about technical analysis, maybe you can draw the 20-day moving average, or the 200-day moving average. So these are the lines that I like to draw: 20-day, 200-day, and then the trend line, of course, the trend line, and then maybe some indicators like RSI, stochastic, all these indicators. Okay, it will help you to see the overall sentiment. Okay. Then identify the industries within the outperforming sectors. Okay, so that means there are only 13 of them, right? So you just screen through all the 13 indexes, and then you see which one is on the uptrend. And that's when you want to invest in those that are still going up. Okay, that's why you want to go for uptrend. However, if you think that you want to invest and then to park your money into those sectors that are underperforming, and then waiting patiently for those sectors to outperform later, then you can always choose those sectors that were being beaten badly by looking at the index and then see which one is at the bottom, like oversold or something. Then you can invest in those. So that means this kind of investment strategy, you need to be patient, because you do not know when the sector will recover. Okay, so you have to be very patient. So it depends on what's your objective. There's no right or wrong. There's definitely no right or wrong. It depends on your objective and your analysis. Then, okay, then after you have identified the industry, right, then you use the fundamental analysis to choose the right stocks, okay, to select the right stocks. So all this fundamental analysis, later towards the end, I will show you some of the financial ratio that I always look into. Okay, and those financial ratios are all the investors always look into. So if more people look into, that means they are more significant. Okay, so this is the list of the Bursa Malaysia sectors. We have 13 sectors altogether. Now, when you do sectors analysis, each of these sectors, they have their own, what I call it, the critical success factor, key success factor. Okay, the critical success factor. So it means that each of these sectors, you need to identify what is the key things there. So for example, construction. Construction, usually you look at what? Anybody from the Zoom here? Construction, usually you look at what? That will determine whether this company, the government project contract, yes. This one we call book order. Okay, so this one we can say that it's a book order. Property prices, government contract, yes. Usually it will be the government contract and then it's called the book order. How much the book order is. Remember when was a good old days for the construction sector? Yeah. When was a good old days for the 2014? Exactly, yes. Okay, and that was a time when we were building what the train, the mass rapid transit, and the MRT. So we were building that, and that has a lot of money, okay, spending onto the infrastructure. So that will boost the construction sector. Yes. Then if you look at consumer sector, this is not so straightforward because there are so many industries in the consumer sectors. You have the products, you have the services, you have the airline industry, you have the product, and then you have the food and beverages, you have the gaming, you have many, okay, under the consumer. So under this consumer, you have different industries. Then you have the energy, okay. Yeah, Muhammad Amar, you are right. Should an investor only focus on a few sectors, like 3 or 4 sectors, or do they need to know about exactly? Okay, so let me share with you my story. When I was a research analyst in the late 1990s something, okay, late 1990s, I was a junior research analyst in a small security firm. So what we do, even in a research team, we have 8 people. We do not have, it's not like we were in charge of everything. So each one of us, we were in charge of a small sector, like those senior ones, they were in charge of those important sectors like banking, and at that time banking, I think construction, and then the oil and gas. These are the heavyweight sectors. So only the senior research analysts were in charge of those. So for those junior ones, then we were in charge of a consumer and all those properties and all those smaller ones. So you can see that we are not like Superman. Okay, we can't focus on everything. So you are right. So that means we need to select a few sectors that we are familiar with, and then we do well in those sectors. Okay, those sectors. So either you can go for like a macro view and then select which are the sectors that are good, and then you start to analyze them, or you just invest in those sectors that you are comfortable. Okay, because in every sectors there must be good companies. Okay, in every sectors. Quite high the price come. Okay. No stock tips. Today's session, no stock tips. We just share the knowledge, information, knowledge. Okay. So I can talk about my opinion, but I don't encourage stock tips. So not a good idea. But anyway, okay. So we will look into the each of the sectors, and then we specialize in it. Okay, so for example, if we at one glance we just look at these 13 sectors, and then you see which are the sectors that are up and coming, in the sense that are good to invest. Okay, that means it's performing well, that or will be performing well. Okay, very good. Technology. Okay, any sectors, anything else beside technology? How about banking sector? Banking. Okay, good one. Now, if it's the last year, you are worried for, okay, for the banking sectors, what's a key success factor? Banking. What's a key success thing to analyze? Interest, yes, interest rate. And then any other thing? Non-performing loan, correct? OPR, yes, NPL, non-performing, all these terms. So these are the terms for the analyzing the financial sectors, the banking sectors. So if you think that the interest rate is going to, that means not going down further, that means it may be stabilizing, but maybe on a rising trend, but stabilizing, then it's good for the bank, because after all, you earn money from your interest that you charge, right? So interest rate going up is good for the bank. Interest rate going down is bad for the bank. Then economic situation. Economic recession is bad for the bank. Economic boom is good for the bank. So you have to look into all this situation. So I would think that for the banks, right, I would think that it's neutral for me. I won't think that it is like outperform, you know, it's like neutral. And then all these, you have each of these sectors, you try to identify their critical success factor. And then for the healthcare will involve what? Will involve different industries. You involve the hospitals, you involve the equipment company. Later we have a case study on the healthcare. And we have all this, then we will look into closely on the healthcare sectors. Yes, the vaccine, very good. So later we look into the healthcare sectors. Then we look at the energy. Energy, what do we look at? There are a lot. So actually for this slide alone, we can talk for hours, you know. For this slide alone, we can talk for hours. Oil price, very good. So what you need to do is that you need to acquire as much knowledge as possible. So I just briefly go through, I just give one keyword for each one. So the industrial product services will be the book order. Plantation will be the, they call it the fresh FFB, fresh fruit bunch. Okay, the FFB per hectare. That means 1 hectare you can produce how many, how much of metric tons of the fruits. Okay, so that's plantation. And then how you value a plantation company depends on how much acres of land do you have. Planted land, not the empty land. Planted land that you have, and then you estimate how much you can get for 1 hectare, and then you times the number of hectares that the plantation company have. Okay. Yeah, FCPO, the price as well. Okay, so now you know that the FCPO price is very good, right? But what happened? What happened that how come this plantation company not earning as much money as we thought? Okay, old plant, young plant, yes, that's right. And that's because supply is not enough. Windfall tax, that's like once in a while. Nowadays, the price is not so fantastic. Okay, so I don't think you have a windfall tax, but I think that is the supply because of the shortage of labor in this industry. Okay, so you have that price. The price is very good, but then you do not have the fruits there for you. Okay, so also you cannot make money because for these commodities companies, the stock is very important. The supply is very important. Okay, so usually they will be valuation is based on P times Q. The P you can't control because the price is based on the commodities market. You can't control. What you can control is the supply. But even though you can control, but only up to a level because it's a natural like weather. It depends on the weather. Okay, so very, very tough. Plantation sector is very tough, and the net profit margin is very low. And each of these sectors, you can see that their net profit margin also different also. Okay, so these sectors, I would think that plantation sectors, their net profit margin may not be as high, but if the price is good, then maybe that will change. Then you have the property. Property, you look at what? Gross GDV, gross investment value or whatever, GDV, right? Then you have the REITs, okay? Development, yes, gross development value. Then you have the real estate, the REITs, okay? The REITs will be those looking at the rental yield, okay? How much you can rent out. If it's a office REITs, then how much you can rent out, the occupancy rate of those premises. Yeah, occupancy ratio, very good. Okay, so each of these sectors, you can see you have those key analyze factors. Technology is also another big topic. Technology, there are so many industries in it, and there are so many Theme. Theme is in a THEM, THEEME. There's so many themes in the technology. Now, can you tell me what is the hottest technological theme now? The hottest technological theme? EV, electric vehicle. You have the cloud computing, you have the semiconductor, you have the 5G. Yes, 5G is the hottest because next year we will be, hopefully by next year, like, we should be having 5G. And the EV is also very exciting because the electric vehicle, meaning that you do not need to go to the petrol station to pump the petrol. You can charge your car with the battery. So all these are happening. And if you are familiar with the US stocks, right, you'll be looking at the biotech, which is the genomic. They call it the genomic. Okay, genomic. And if you are familiar, okay, solar is more on the utility, energy, green environment. Okay, if you are looking at the technology, there's one area that is also very hot at the moment, which is called the 3D printing. Have you heard about 3D printing? Okay, so all these are the tech stocks that are driving the technology index. Okay, so for Malaysia, we are mostly the semiconductor companies. Okay, so later I will show you some of the industry. Then the telco and the media, we are looking at the subscribers like Maxis and DG and all this Axiata. How many subscribers do you have? You must see that the subscribers are enough, and then you can measure that how much per person, the revenue per person. Okay, this kind of key terms that you are analyzing these telecommunication stocks. And of course the capital investment, how much you're going to invest, because all these are cost to you. Okay, so all these. Then the transportation and logistics. See, we can talk so much on this, like transportation and logistics. We'll be looking at the your book order, okay, how much order, and then also your how many fleets or how many cars, how many ship. If let's say you're looking at the shipping company, how many fleets, how many ship that you have, right? And then you also look at the ports, okay, the ports, revenue per ton or whatever. Okay, so these are the things that are concerning with aviation. I will put the aviation because we only have one airline company, so we put the aviation under the consumer service. Okay, then the utilities will be those electricity, those renewable resources like green energy under the utilities, because usually these utilities companies, they want to take care of their image about ESG, right? Environmental friendly and all these things, social responsibility. So they will move towards the green energy services, okay, production. So they will move towards that. So you have solar energy and things like that by all these utilities companies. Okay, yeah, Tenaga. Even Tenaga has their like a huge solar field, right, in Kedah or something like that. Okay, so if you can see that, you see there's so much of a knowledge behind each of these sector. It's not possible that you are like well-versed or specialized in all the sectors. It's not possible unless you are working in this industry like a research analyst. Then you probably will know everything. But if you are like normal people, right, you wouldn't be able to know so much. Okay, so one way, but all this you can train. Okay, how do you train yourself? So one way is to read lots of analyst report. Okay, analyst reports. Read. You have to read lots of them, analyst report, and then you can be master in that sector. And where do you get those analyst report? I usually get my analyst report from i3 Investor. Have you heard about i3 Investor? Okay, i3 Investor. i3 Investor. Okay. Either you can go for i3 Investors like this one, or you go to Busa Marketplace like this one. Okay. And the Busa Marketplace, you have to register
Only not
first.
seeing your screen. Are you seeing your screen?
Okay, let me see. Okay. Busa Marketplace. So this one you got to register first. And KLSE screen up. Okay, but I'm looking at the report now. So over here, you just key in, there's a magnifying glass here. So you key in, let's say you want to look at the report for, let's say, Maybank. Okay, then you have Maybank. Then you will click where you will click download the report here. Okay, you click download the report. And then you have the analyst report from Busa Marketplace. And this report is very, very up to date. You look at the date here, it's March 8. Today is March 10. So it's very up to date. And this score, the higher the score, the better. So it's a score of up to 10. So here you got 8 over 10. So this means that this Maybank is scoring very high. And then if you look down, you can see that you have the industry here, peer comparison. So you can compare within your industry. So these are all the banks. So these are all the banks that you can see. Okay, these are all the banks. And then their performance, their market capitalization, and then their PE ratio and dividend yield and net profit margin. So among these, my favorite is net profit margin, dividend yield, PE ratio. These are the top ratio that people like to see. Okay, from here you can see who is better. Okay, so this is from the Busa Marketplace, and then from the i3 investor. From the i3 investor, so as I said, this session I want to make it very hands-on so that you know where to get your information, at your fingertips like that. So, okay. So for i3 investors, right? Let's say I Google Maybank. I usually use this search bar to Google for the stocks that I like. Okay. Then it will be, and of course over the i3 you have a lot of forum so you can see what other people are talking about. So I click, wait, it's a bit lag because I opened too many browser. Okay, so I click the Maybank, the price target, then here is the price target. So here you can see that these are very recent price target. You have March, you have February, and then these are research houses. All these are research. You have Hong Leong Group, Public Bank, Kanaga, all these research houses. And then you look at this. There's news here, magnifying glass here. So you click this one, you can see the report from Hong Leong Group. And then if you click the Public Bank, you can see the report from Public Bank. So you can see different fund houses or different research houses report from that website, okay, from this website. Very comprehensive, okay. So back. So you can see you have so many. So I always go for the recent one. So now it's March, right? So then you don't go beyond February. So you go for the most latest one. Okay, so these are they usually have this earnings announcement. Once they have their earnings announcement, then they will compile the report, and then review, and then to have a fresh price call, whether a hold or sell. Okay, so these are the price call by all these analyst research houses. Okay, so nowadays you get all this for free, on the open source. Last time we have all those, we have a library, and then in the library we have all those annual reports, and then whenever you want to look for the information, you have to go through those annual reports. So everything now is so different now. So everybody can be an analyst at home, because you can do so much thing on this open source. Okay, so back to my slides. Okay, so let's do here. So you can see just now I already show you some of the chart, right? So you can see that because I screenshot this chart in February, so the chart may not reflect very well. Example, the technology in February it was peak, and then just now I show you the technology was actually there was some correction here. Okay, so these were screenshot that I did in on February, I think 6th of February. Okay, then the financial services. Financial services, you can draw a trend line like this. You can see that it has crossed above the 200-day moving average. And then this is a downtrend. So it is a positive breakout, and plus you have a W shape here, a bottom, W bottom here. So that means that this is a clear breakout, okay, for a longer term. Then plantation sector. Plantation sector is interesting. You have the price, but you don't have the stock. So, but anyway, you look at this plantation sector, there's a divergence. Why I say divergence is because the crude palm oil is doing very well. The price, it's like I think 3-year high. Is it 3-year high or something like that? It's quite high. It's about 3,800 or something. But you look at the behavior of the plantation stocks or the plantation companies, you can see that the plantation companies they are not reflecting the high price that they're enjoying. So that's what I call a divergence. So either this company will pick up, okay, so when they see that the crude palm oil price is sustainable, it will pick up, or the crude palm oil price will come down. Okay, they will have to merge in one way or the other. So you cannot have divergence for so long. For you cannot have divergence forever. You have a divergence, but then in the end you have to merging back together. So either the crude palm oil price will come down, or the performance of this plantation sector will go up. Okay, you have to merge. So it's either one way or the other. So now I still can't tell. Okay, but it's just that I see that these plantation companies, they are below the performance, market performance. Okay. Then analyst time frame, right? It depends, depending on the time frame. It could be daily, weekly, or whatever. Depends on your objective, whether you want to go for a long-term view. If you want to go for a long-term view, you can go for weekly. I don't go for monthly, I go for weekly, okay? But if it's a medium, short-term, daily is possible. Oh, 10-year high, thanks. Okay, thanks. Thank you, Raja Ratnam. 10-year high. Okay, so almost 4,000 per metric ton. So that's very high. It's because of the stock supply. Okay, we do not have enough of the fruits. We have the price, but we do not have the fruits. So that drive the price up. And that's because of COVID too. Because you know why? With this, because of the COVID, right? They have to send all the workers back, and then you can't have all those workers coming for this plantation work. Okay, very good. More to uptrend. Okay, hopefully. Okay, hopefully. The commodities they are all linked together. Okay, so if you see the commodities in one sector is doing well, most likely other like gold, silver, maybe there will be all these are doing well as well. They are all linked together. Soybean, yeah. Okay. Okay. Okay, so this is a crude palm oil futures. I usually look at the index Mundi, index Mundi. Okay, right here, index Mundi. Okay, I look at index Mundi, and then I look at their price. Okay, so okay, so this one I compile the annual gain for all the sectors, all the 13 sectors. I'm not sure whether Index Mundi is issued by Malaysia. I'm not sure. I don't think so. Okay. Okay, so for this 2020, right, the sectors, right, I compile all their annual gain. Annual gain means from January until December, what is their performance? So last year, only 4 sectors that were positive. Only 4 sectors. They are the healthcare, technology, industrial, and transportation and logistics. Okay, also only these 4 sectors are positive. The rest all negative. And if you believe that reversion to the mean meaning what? Okay, reversion to the mean. Reversion to the mean meaning that everything have an average. Mean means average. Okay, every stock performance, every sector, they have their own average performance. So if let's say you were down for too much, like this energy minus 27%, you down for too much, then isn't it will go back to the revert to the mean. Okay, it will revert back to the mean. So therefore, for those either you are the fund managers, analysts, or investors, if you believe in reversion to the mean, now you should be investing in what? If you look at this chart, with this information, you should be investing in all these very negative sectors, because you believe that all these oversold sectors, right, will one day revert to the mean. Okay, so you'll be investing in all this. So that means what? That means, like beginning what I said, that means you've got to be patient, because you never know when it will be recovering. You never know. It's just a matter of time. You know that it will recover. It's a matter of time. Okay, and so include what? REITs, property, construction, so, and consumer. So you can understand why these few days, these properties and constructions are doing very well, because people are thinking that maybe when the market recover, this will improve. Okay, so right now, because they are making losses, so you can see that their valuation reflect of their losses. Okay, they become penny stocks. Many of the construction and property sectors, right, they become 40 cents, 50 cents. Okay, it's like, in terms of the price, I'm not looking at the valuation. In terms of the price, it's very cheap price. 40 cents and 50 cents is like a penny stock. But the valuation is because of the COVID, they have negative earnings. So the price is a reflection of the valuation. But who knows in the future, provided the management is good, right? Who knows in the future when the economy recovers, do you think that these properties or construction sectors, they will be down forever? Of course not, right? They will recover. So in the future, when their earnings, everything pick up, then it will reflect on their valuation, and then the price will be driving up. Okay. Okay. So so oil and gas, all this. Okay. So which companies you use my method, the method that I show you, right? Malaysia.biz, and then you look at the oil and gas, and then you see what are the sectors and what are the stocks in the energy sectors there. Okay. Okay. So now this year, what sectors are you looking at? Okay. This year, what sectors are you looking at? If let's say you're looking at transition to post-COVID, from COVID to post-COVID. Okay, so many of you say energy. Okay, yeah, energy now is above 60 USD per barrel. So maybe energy, maybe construction. Yeah, technology is forever, because you know why? We are in another 4.0 industrial revolution, and this technology revolution is a very huge scale one. It's going to be like in the 80s that we had last time. When we had in the 80s, we were having a lot of electrical appliances, television, and all the. Then when it comes to 90s, was mobile phone and all this. So whenever you have a major technological change, right, this sector definitely is it will go well. Okay. Then some people say property. Now property, very attractive. I agree. A lot of them, like 40 cents, 50 cents, right? Very attractive. But you got to be patient. Okay, you have to be patient. Anybody say plantation? Plantation, you must understand the industry well, then you can talk about it, right? Fintech, okay, fintech is more like I would think that in our Malaysia, it's a ACE company, right? It's not. Well, it depends on the situation, the fintech, because this fintech if let's say the product is well used by people, then it could be very promising. Okay. All right. Retail. Retail. The retail, yeah. So all these are opening up economy. So we are looking at those. Okay. But the core one, I think the core should be healthcare and technology, industrial, transportation, and utility. These are the core. That means stable one. You won't go wrong. Okay. It won't go wrong because healthcare and technology, you know why, right? Because technology is because of the 5G and the EV, electric vehicle. And for the healthcare, because we are still in a COVID and then vaccination and then post-COVID. So public health is a great concern for many people. It will be a great concern for the whole world. So healthcare industry will continue to do well together with technology. And then industrial product and logistics is because of the opening up of the economy, so they will do well. And then for utilities, it's a defensive sector. So out of these sectors, right, it's good that you hold at least one or two defensive sector, because this one or two defensive sector is like, you know, like a FD, like that, safe deposit, FD, okay, fixed deposit, okay, it's like fixed deposit for you. So it's safe, okay. Good dividends. Yeah, they have good dividends also. Besides the banking, right, the utilities also have good dividends. Okay, maybe you can like 5, I think 5, not more than 5. Like if you want to construct one portfolio, maybe you can hold not more than 5 sectors into your portfolio, so that you don't become too busy looking at the news, because otherwise there are so many for you to look into. You don't have the time, okay, and you are not like a professional, your job is not full-time professional analyst, so you don't have the time. So most likely not more than 5 sectors is good in your portfolio. Okay, you choose the best sectors that perform well. Okay. All right. Then, okay. So next we look into the sectors. Each of the sectors can further be divided by the industry. Now, for this list, right, actually I can get from Busa Malaysia website. Okay, let me give you the link for Busa Malaysia website. Have to go to the beginning of the chat. Okay, maybe I go to, okay, wait, go to here. I get this. Go to the chat. Okay, I give you, I'm sharing with you, this is the PDF file from the Busa Malaysia website. If you to Google sector list, Busa Malaysia sector list, and then they will bring you to this link. It's a PDF file, and you can look at the industry. Okay, so this is the industry. So you can actually, how do I get rid of this thing? Okay, never mind. So I will enlarge a little bit. Okay. So this list, right, is actually from Busa Malaysia. It has all the sectors in the first place, and then followed by the subsectors here. So construction is just construction, right? Then the consumer product, you have so many consumer product. Industries, these are the sub-industries, subsectors. Then the energy, under the energy, you have oil and gas, you have other energy resources, energy infrastructure, equipment and services. Then under the financial, you have banking, insurance, and other financials. So fintech will be under other financial. Then the healthcare, you have the equipment. So glove company will be under the equipment because it's the gadget. Then the healthcare provider will be the hospitals, the pharmaceutical, industrial. Okay, so then here got the description. So this one, if you want to go for sector analysis, definitely you have to study this one. Okay. CPO chart, index Mooney. Let me see. The CPO chart is called the index Mooney. Okay, let me Google. Index Mundi. Okay, so you go to index. Okay, then you have to Google CPO. Then it will bring you to that price. Okay, so this one. Okay, so now the price is 900 USD, 922 USD. Okay. So, okay, I go back to my PowerPoint. Okay, so this is the crude palm oil chart. Of course, Malaysia one, you can look into the Malaysia one, which is the Malaysia crude palm oil website. You Google and then they will lead you to, in fact, you Google CPO, FCPO price, it will bring you to the Malaysia chart as well. But this one, I look at it, it's a US in terms of US dollar. Okay, because this one got like 20-30 years of data, which is more than the Malaysian one. Okay. Then you have the subsectors. Now technology. So let's say we look at the technology. Under the technology, you have these subsectors as in digital services, semiconductors, software, and technology equipment. Okay. So I'm going to show you this one. This one is usually what I do. This one I look into the 5G industry. Okay. Out of the technology, you have so many themes, right? So 5G industry is one of the themes that investors are looking at. So we look at 5G industry, and then we come up with the the components that make up of this 5G industry. That means in this 5G, right, who are the players? So then I divided them into different category. So number one category is this radio frequency component manufacturing. So this 5G involve radio frequency, and then these are the components, okay, for reception of the 5G. So these are the companies that are involved in the production. So how do you get hold of these companies? This one you really have to do homework, as in you go into their website or you go to their annual reports, and then you have to look into their products, the things that they are producing. So this will take a lot of your time. If you want to locate, after you locate the industry, right, then you want to locate the Busa Malaysia stocks, right, then you have to, based on the technology sector that we find from the Malaysia stock base, you can see a whole list of the technology stocks over there, right? So from there, you have to click one by one, click in it, and then you have to identify, select, and then to see what kind of production that they're doing, or what kind of product and services they're offering. And then from there, then you see whether they are concerning with this industry or not. So it's a lot of work. Okay, this part here is a lot of work. But yeah, but nowadays we have analyst report. So nowadays I don't do this job anymore. I rely on the analyst report. So I read different research houses analyst report, so that it will save a lot of my time, definitely save a lot of my time. Okay. Okay, so these are the companies that producing radio frequency. Some companies appear a few times because they produce not only the radio frequency components, they also are the OSAT, the outsourced semiconductor assembly and test manufacturer. So they are the OSAT manufacturer. So you also see that their names here, Inari, Unisem, in these two categories, and the MI also. Then you have the 5G service provider. Now this one will be the mobile company, okay, the mobile, the 5G. And then you have the automated test equipment, the ATE. Okay, the ATE is equipment for you to produce for part of the component for the 5G. And a lot of the technology gadget require all this ATE. Okay, actually it's actually for testing also, because a lot of time you need to test whether the components are working or not. So then this is called the test. Okay, they call it the test and burn or something like that. Okay, test and burn. So then you have these companies, the Vitrox, the Panda, and also the JF Tech. Okay, then you have the automated solution provider. So this automated solution provider is a process of integrating all the domain and functionally tools into various automation layers. So this one maybe involve the IoT, Internet of Things, okay, to have all this automation. In order to have automation, you must have those Internet of Things that link to the 5G. With the 5G coming, right, everything you in your household, from television to washing machine to the rice cooker to every of the household appliances, right, everything you can control in your mobile phone. Okay, so this is what we call Internet of Things. So it will be getting very, very common in the next 2 to 5 years, very, very common, together with electric vehicles. Because once we have the 5G, only we can have all these things coming out. The electric vehicles, the Internet of Things, all these things. Before 5G, now we have 4G. So most likely our internet is not stable enough to enable you to have this kind of you know, have this kind of a service. Because just imagine if, let's say, you're driving your electric vehicle and then supposed to be autonomous, that means supposed to be drive by itself, then suddenly the Wi-Fi problem, and then you have a run into accident. So it's very, very important that your whole country must be 5G enabled before you can have the autonomous vehicles. Okay. At least 10 years, is it? Oh, okay. I don't know. I hope it's within 5 years lah. That means we need to put in a lot of infrastructure in this area. Okay. And facility cleaning and maintenance. Now this is interesting because you see the chip, they are now producing very, very small chip, like a nano. They call it nano, right? Nano means very, very small. Nano, like a 7 nano, or the 4 nano. I think 4 nano is the smallest size. Pica chip, yeah, the Pica chips, yeah. So probably, Vivian, you are working in this industry. So for those of you who are working in the industry, you are very familiar with this thing. Yeah, thanks. So that means this Pica chip, they're actually found in your mobile phone and a lot of the electrical gadget. So you need to have a very compact storage. So therefore you need to have, and then in order to do that, then of course cleaning is important because everything is so small. So everything has to be very clean. Okay, so then this front end is offering cleaning services for these semicon industries. Okay, and their business is all the way to China. Okay. So, okay, so these are the case study. Okay, now I know many of you want to know about the glove stocks, right? The glove stocks is under the healthcare, but I'm not going to say whether it's good or bad, but it's just that I have to say that their PE is very low. Okay, their PE is low. So that means what? That means people are sometimes in the industry, there are two reasons why the PE is low. One is that, number one is that low PE is that you are really undervalued. Okay, you are really undervalued. Number two is that people actually project the future. That means they bring the future outlook into the current situation. So they will think that this future outlook for this particular stock or industry, right, may not be as rosy as before. So then they discount the price a lot because they want to reflect on the future prospect. So, but however, if let's say we are looking at the pandemic and the COVID and also the vaccine, right? This thing, if it's dragging and dragging and dragging, maybe it will not be ending so soon. Okay, and also because people are more into the healthcare in terms of the service provider, and also in terms of the technology behind it, there are a lot of innovation behind. So a lot of time they must have certain practices, and most likely they will require this hygiene practice. Okay, and the only concern is the supply. Okay, the demand is there. Okay, no doubt the demand is there, but the supply, there's so many looking at the high profit margin, because this thing is like not a monopoly, it's like an open market competition. So your competitors can be not only from Malaysia but all over the world. It's a global marketplace. So if other people see that this industry is making huge margin, right, so what they will do that is that they will also compete with you, because they also want to provide this kind of enjoy this kind of profit. So you will see that in the future more and more competitors will be coming into that industry. Okay, so that's my concern. But in terms of demand, I think the demand should be there. It's just a supply. Okay, so and that maybe will cause some pressure. But that will be in the future lah. But in the current moment, there's one way for you to check the price. You can always go to Amazon or eBay to check the price for the Nigel glove. Okay. Okay. The glove demand is also reducing. Yeah, right. Okay. Because as we are entering into here, so but the thing is that the average selling price, is it falling? Average selling price. Okay, so in order to check the average selling price, you go to eBay and Amazon. Okay, and check their pricing for the 1,000 pieces per box is 1,000 pieces. How much are they selling? Is it still 200 over US dollar, or is it coming down? Okay, so this thing you have to check. Okay, if it's coming down, that means there's a concern. If it's still maintained there, that means it's still doing well. Okay, so that's I have to talk about the glove industry. And then the healthcare providers, these are the clinics and the hospitals. Okay, so hospitals are like IHH and then KPJ, all this. Sunway, is it under the property or the Sunway group? Okay, so that means Sunway is a conglomerate. Because if let's say you are looking at these stocks, right, you try to go for the pure if it's a conglomerate, that means you are actually looking at many services or products into that company. It's like it's difficult to compare. You go for the pure one, it's easier. Okay, somebody asked about vaccination, right? Okay, so for vaccination concern with who? Vaccination will definitely concern the pharmaceutical, because currently Pharma Niaga and Dual Pharma, they are the ones that are doing the field and there's one keyword, field and something. Field and okay, cannot remember. Field and something.
Finish.
Finish, yeah, field and finish. Okay, so Pharma Niaga and Dual Pharma are doing it. Okay, you have to fill and finish, and then you provide for the rest. But the thing is that this thing, right, is not it's a national service thing. So I don't think you can make money out of it. Okay, so in terms of the vaccination itself, you can't make money out of it. But what you can do is that the equipment, like gloves, maybe you need to wear gloves in order to have the vaccination. And then another thing is the needle, like K1, right? Needle, because they are producing the cap of the needle. Because this thing, definitely you will have a lot of shots when you like vaccinating for the whole population. You are looking at tens of millions of the population. So PPE, yes. So all these equipment thing that if let's say you identify the companies are producing these, so probably they can do well. Okay, probably. Okay. I didn't say 100%. I just said probably. So everything, it's there's a probability there. Okay.
Only you need to hurry up a bit.
Okay, sure. So then you will have the healthcare. Yeah, gloves definitely still need. So healthcare equipment. So these are you identify the companies now. So we have identified the companies. The hospital bed is the LKL. The Nova Pharma Solution is a facility design. So all these we have given the market capitalization, so we know how big is the company. So the supplies, in terms of supplies and equipment, these are the gloves company. Okay, and also plus K1 also. Okay, and a few other smaller ones lah. Then healthcare providers. So healthcare providers will be those hospitals. Okay, hospitals. And these are the healthcare providers. And the definition for the Busa Malaysia, that just now I show you that PDF, right? Excuse me, the definition also include the eye, the maternity and all those. So this one also include Optimax. Okay, those top vision, eye specialists, all this included. And then the pharmaceutical. Okay, pharmaceutical. and the biotechnology. So for biotech, our Malaysia, we do not have much, a lot of companies involved, or some of them they are involved, but they are not the public listed companies. So for public listed companies, this is the closest that we can get, but it's not like 100% close, but you know, the closest that we can get. Then life sciences. Life sciences is also part of the biotechnology, is important. But this one is talking about the life sciences for the tools and services. Okay, so you are looking at the tools. So then this one include this YSP, Apex, and then actually Apex also part of the pharmaceutical. So some of them they have like a gray area. Okay, they are part of here industry, and then they can appear in a few areas because they provide, as long as they are providing this industry, and then they also provide the other industry, although in the same sectors, right, you can link them together. Then Malaysian Genomic Resource Center. Okay, I find that this Malaysian Genomic is quite interesting because, you know, in US, any word that has this genomic is like the stock will go up. But Malaysia, I haven't really go into looking at their annual reports and things like that, so I'm not very sure what in fact they are doing, but just to look at the name is very interesting. Okay, then once you identify the stocks, right, then you have to look into their financial ratios. Now this one, usually the financial ratios where I get from i3 Investors. Okay, and then I also get from one mobile app, is called the Stock Hunter. This is a mobile app. Okay, Stock Hunter. So the mobile app, I find it very, very convenient, is because whenever I'm everywhere, okay, sometimes when you are queuing, you are waiting in line, or you know, you do something, waiting for food or whatever, naturally you will use your mobile phone, and instead of looking at the Facebook, looking at the gossip, right, why don't you just looking at the Stock Hunter? Okay, then you can see, identify some of the stocks that, you know, try to identify them, okay, from the Stock Hunter, because it's very comprehensive in just one app. So over here, we can see that usually for earnings, right, we look into the actual earnings, we look at the expected earnings, and then we look at the future earnings, okay, the future earnings. So sometimes, if let's say the 2020 year is halfway through, like let's say we are end of 2020, so then it's not complete yet, the 2020, so therefore we put as a E because it's not completed yet. And that means the fourth quarter, maybe we put a expected one. Okay, but sometimes if let's say if it's a next year definitely is expected. You are looking at the future. Okay, so A is the actual. Okay, and then the C means core earning. Now in like last just now somebody say Sunways, because Sunway is a conglomerate. So if you're looking at conglomerate, you can't find the core earning. The core earning is like you have so many businesses. So what it means core earning is that you must have that core business in that company. Okay, the core business. So plantation company, the core business is oil palm. Okay, yeah. Then you are looking at with too many, then you can't really analyze, because first thing, you can't even compare. You need to compare within the industry. When you do sector analysis, you need to compare within the industry. If let's say the earnings is too vague, so you can't compare very well. Okay, so yeah, okay, good. Critical success factor. So then the next thing you need to highlight or to observe is the earnings growth, because you must know that the earning is growing. You wouldn't want to invest in something, some company where you don't see the earnings is growing. So the earnings growth is very important. Okay, and also all these earnings, right, will reflect in your earning per share. Okay, and why earnings per share is very important? Because earnings per share will affect your PE ratio. And why PE ratio is so important? Because PE ratio will immediately reflect on your market current price. Okay, so whenever you see that there's an earnings report on that day, do you see that everybody is like waiting for the earnings report? Okay, if it's after 5 p.m., then you wait after 5 p.m. If it's in a lunchtime, you will wait, you will go and search for the information. That's because the earnings report will tell you what is the new revised earning per share. So your earning per share figure will change. So when your earnings per share figure change, then immediately it will reflect on your PE ratio, and then it will reflect on your price. So all this is a chain reaction. Okay, so all this will definitely affect the price fluctuation. Yeah, PE ratio, the lower the better. Yes, but too low, it's unusual. If let's say the PE ratio is 5 or 6, it's unusual. That means that industry itself is having a problem in terms of the outlook. Negative means you are not making money. Okay, you can have a negative. Sometimes they will put a negative PE, or sometimes they put not applicable, NA, not applicable. So because that is because you have a negative earnings. You can't even find your PE ratio. Yeah, past result, exactly. So that's why you must have this future. That's why you must look at the analyst report, because only the analyst report, they will give you the future. You see the CY21E, all this future, they will only give you the future in the analyst report. Otherwise, you won't be able to see. Okay, so whatever you publish on the annual reports are all historical data. So basically, the steps in the fundamental sector analysis is that you need to assess the overall industry, okay, and then to identify the drivers. The drivers in this case will be the key success factors, okay, the drivers. Then determine the overall industry structure, and then you look into, if you can, right, those experienced ones, you can look into the industry, and then straight away you tell this industry is billions. What is the the market capitalization, or what's the sales of that industry? If you are very experienced analyst or investor, you can tell, okay, this glove industry is worth how much of a sales, annual sales. Okay, so you look into different industries in terms of their annual sales. If you are really very good, you can get those information. So that means you are looking at the whole industry, and in money, all is money. Okay, this industry can bring how much sales, that industry can bring how much sales. So so all these figures. Okay, then this global, of course, I wouldn't touch too much on it. The thing about global is important is because of the aging population, and also the technological development. And they are saying that in the next 5 to 10 years, right, all cancers can be cured. So that means nobody can die of cancer, because they can change the genes. Because you know that the cancer, the reason why you have cancer is because of the genetic. Okay, part of the reason is because of the genetic. So if you can alter the genes, right, you can cut out the cancer cell. Okay, these are the financial ratios that I always look into. First, I look at the market capitalization, how big it is. Usually, I prefer more than 1B. Okay, then it's worth for me, and also for, which is the fund manager also like large cap stock. Unless you are looking at those funds that are looking for small cap stock, then they will look for small cap stocks. But basically, the larger the better. Then the PE ratio, you look at PE ratio, the ROE, and the profit margin. Okay, this look at the profitability. Then you look at what? The dividend yield. Okay, then you look at what? You look at the debt to equity. I like to look at the debt to equity because in Malaysia, I don't know why the Malaysian investors seems to like debt-free stocks. That means if let's say your company is debt-free, then they will really think highly of this company. Then another thing is for Malaysian companies, their cash reserve is also very important, because these are the Malaysian investors looking for cash reserve. No debt, yeah, correct. Debt equity 0 means no debt. So that means you do not have long-term debt, okay? Or you may have current liability, but you do not have long-term debt. That means you basically you can cover all your debt, okay? the video you can play back using the YouTube of this live chat. Okay, so you can, whenever you want to play back this whatever I said, right, you find it very informative, you can always watch back the YouTube in this YouTube channel, which is a live channel. So you can subscribe it and then you can look at the videos there. Okay, all right. Then this diagram I want to show you is because of the sector. Who can tell me where I got this chart from? Anybody? Can anybody tell me where I can get this chart from? I remember Busa Marketplace, very good. Farah, you're right. Busa Marketplace, okay? So just now in the beginning, I show you the sources of the, yeah, right, but I have no incentive for you. Okay, it's not a quiz, it's just testing whether you're listening or not. Okay, so all of you are very good. So in fact, you can click type Busa Marketplace, and then you register, and then you click the stock name, and then you download the report. After you downloaded the report, then only you can see this. Okay, so this is important for sector analysis. This is a must-do step. Okay, you must compare with the peers. You must compare with the peers. Otherwise, you are not doing any analysis. Okay.